Welcome to the Bitcoin Zodiac, the podcast that explores the intersection of finance and astrology, where we use a combination of spirituality and logic to help us connect the dots in the markets. Hosted by Corinne Florence and Claire Marinan, who both come from a diverse background, bringing with them a wealth of knowledge and experience in the realms of astrology, cryptocurrency, trading, philosophy, investment strategy, and of course, Bitcoin. In each episode, we explore the economics of the markets following the evolution of Bitcoin and cryptocurrency through each moon cycle and astrological transit. Join us on this journey as we explore the intersection of these two worlds that are often thought to be at odds with one another, finance and astrology. Whether you're a seasoned crypto investor, a day trader, or just starting to dip your toes into the world of Bitcoin and blockchain, Bitcoin Zodiac is the podcast for you. So sit back, relax, and come and expand your consciousness with us as we explore the world of the financial markets through an astrological lens.
In today's episode of the Bitcoin Zodiac, we're thrilled to welcome two luminaries from the forefront of cryptocurrency innovation, Adam Soltis, founder and CTO of Koinos, and Cole, the driving force behind business development and marketing at Koinos. Adam, a software engineer, father, and husband who is dedicated to fostering global prosperity through sound money, and Cole, a freedom enthusiast passionate about spreading the Lightning Network. Both bring a wealth of knowledge and experience to the table. Together, they'll share their insight on the future of finance, the transformative power of the Lightning Network, and the pivotal role of Bitcoin in shaping a prosperous future. Join us as we delve into the visionary perspectives in a discussion that promises to enlighten and inspire. Enjoy this episode, and let's get into it. All right. Hello and welcome to another episode of the Bitcoin Zodiac. I am Corinne Florence and we have Claire, our fantastic, beautiful co-host here with us today. And today we're joined with two incredible guests, which I'm really excited to chat more with today. So we have here Adam, who is the founder of Koinos, which you will learn more about today. And we also have Cole here, who is the in business development and marketing for Koinos. So welcome, guys. We're super excited to have you here.
Yeah, thanks for having us.
Thank you very much for having us.
So now, Claire, how should we start off with this? Because we've already been chatting to the guys and we have like a million questions. What do you think should be like the best opening question?
I feel like we can dive straight in and just talk about the importance of self-custody and what that sort of means in the Bitcoin space. I think that it is something that we talk about all the time on the podcast, and I'd love to hear the guys' perspective on that.
Yeah, so I'm a big proponent of self-custody. I think once you invest in Bitcoin and you start to have more than a few $100s there, or more than you personally are comfortable losing, like you'd be upset if you lost it, then it's time to think about taking custody of your own coins. So if you have them on an exchange, or you have them in a hot wallet that's on your phone, or a custodial wallet where you're trusting another company to give you like an account balance, then you really want to figure out how to move those coins to an address where you have the private keys and no one else is going to be able to censor you from spending those coins wherever you want to spend them, or worse, take those coins and not let you have access to them. So yeah, the way to do that is to get yourself or a paper wallet where the private key for those coins is generated by a device that's never connected to the internet and is stored in a way where it's never connected to the internet, so that it can't be hacked. You can't get a virus, you can't get a malware or something that's going to capture that key and be able to spend the coins. And I don't know, we can dig into like different options and ways of doing that, or yeah, whatever
Yeah.
you want to cover here. But
I would love to just ask, because I think this is such an important question. And maybe this is where you can also tell us a little bit about you and your background in just crypto and blockchain and how you were exposed to it. At what point did you understand the importance of private keys? Because I can speak maybe for me personally, I was just like, download my Coinbase, get my Bitcoin, and I'm going to be a Bitcoin millionaire when I first got started. And then I learned more and I was like, I don't know what I'm doing. So tell us a little bit about your journey, and where in your journey did you really find out about this too?
for me, I got into Bitcoin in 2011, so there weren't a lot of options out there other than keeping your own coins. So the way that people would run Bitcoin then was you download the Bitcoin Core software, you synchronize the blockchain, and you have this wallet on your laptop basically, which was self-custodial, but it's considered a hot wallet because it's on your laptop, it's connected to the internet. And there were lots of cases where people were getting hacked even back then. Like someone would access their hard drive and be able to get that wallet file and take their coins. And there was a big exchange hack early on with Mt. Gox. They kind of had these issues and went belly up, and a lot of people had their money loaded on that exchange, which was one of like the first exchanges for Bitcoin, where you could trade Bitcoin online, and a lot of people lost their money. So early on, there was, I don't know, a big push for people to learn about self-custody. And I guess, yeah, like we were talking about, the paper wallets came around and people were promoting those as a good way of custodying your own coins. So there's a website called bitaddress.org that I think is still online today, that I went to, and you like move your mouse around as soon as the page loads to generate randomness, and it creates a private key based on these random samplings of your mouse movement. So I don't know, I found it kind of interesting. And then it gives you just the private key on the left-hand side and the address on the right-hand side. And it prompts you to print that out. So once you have that piece of paper with a private key on it, that's like your key to your money. And if you load some Bitcoin into the address that it gives you, then you know that only you, with having that piece of paper with a private key, are able to spend it. And it takes a while to wrap your head around that, because you can generate this number while you're offline and derive an address from it, which is weird, because you think like, well, how does the Bitcoin network know about that address? Who's giving me that address? And it's really just a number. It's just a big random number that you could create it with rolling dice or shuffling a deck of cards. And what you really need is a number that has 256 bits of entropy or randomness that is big enough to be impossible for anyone to guess, or any computer to guess. And once you have that, then you can derive the address, and it's just using math to come up with this number. It's not asking the bank or asking a server to give you that address. It's just derived, from that random number. So I don't know, it's kind of interesting.
Just while you were saying that, I generated it. Just
nice.
Saying. It's still there, bitaddress.org.
Yeah.
Yeah.
Interesting. So it is interesting because it sort of really ties into one of the core fundamentals and key aspects of what makes Bitcoin interesting, what makes Bitcoin different to any other asset, in the sense of, don't trust, verify, that the slogan that we hear all the time in Bitcoin. But it's also moving out of this sort of trust-based system, which you touched on a little bit, when you're talking about you need to ask the banks to generate a password for you, and you need to, those sorts of things, that this is purely based on math and code and tech. So why don't we move into a little bit of a tech history lesson almost, on the sort of fundamentals of the tech of Bitcoin and how it works.
Well, do you want to explain your understanding of the Bitcoin tech, and then I'll fill in if I think of anything?
Yeah, absolutely. Yeah. So I've been in Bitcoin since 2015. Kind of similar to a little bit of Adam's experience. Things were very complicated back then. I was using one of the old school exchanges, CEX.io. Not many people have heard of that. I was in another exchange that I forget the name of, and I thought I got scammed because I had like $500 in Bitcoin in that exchange, and I just didn't know how to withdraw because it was that complicated. And I'm kind of savvy with computers, but it was just that complicated. So a year later, I finally figured it out. I'm like, wow, I actually got my Bitcoin out of there. That was impressive. So, and then I got into, I just over the years, I was kind of dabbling with it. And then I got into mining. And then when I got into Bitcoin mining, I was like, wow, this is incredible. Like, I made money with this machine plugged into the wall. And I got some really good deals. I made some connections in Hong Kong, Shenzhen, China, and I bought a bunch of machines. And the reason why I'm mentioning this is because this is what taught me about how Bitcoin blocks are mined and how the Bitcoin network kind of works and stuff like that. So through a lot of troubleshooting, I've had machines break down. I've had to fix them. I've had to, figure out what the code is. What does the code mean? And it's just really fascinating how amazing proof of work is. And that's why we like Bitcoin so much. And me and Adam, we only deal with Bitcoin or Lightning or Liquid. Liquid is the layer 2 solution for Bitcoin, which is on chain, which is what Coinos also uses. And Lightning is also a layer 2 solution for Bitcoin, and that layer 2 is off chain. So when we, with these mining machines with proof of work, it's amazing how, when people say the comment, we are all Satoshi, that means that we are the network. And people who run nodes and people who run miners are contributing the most to the health of the network. Health as in hash rate as in security and efficiency. So the more hash rate there is on the network, the faster the transactions are, the safer it is. And what I really like about the strength of Bitcoin is in 2022 proved a lot to me and a lot of other people how resilient and how strong the Bitcoin network is, or how strong Bitcoin is on the blockchain network. And the hash rate of Bitcoin was going to new all-time highs throughout 2022. Even in November, when it went down to 15K, the hash rate was beating all-time highs. And that goes to show that people didn't give up. The network, the proof of work, the community, we believe in it that much. People were setting up more miners. When the hash rate's going up, that means there's more miners being put on the network. People who had lots of miners were not giving up at all. The miners were not selling for a long time. They might sell a little bit after the halving, but all the data is proven. They were not selling because they're hardcore believers, right? And the Lightning Network capacity was also reaching new all-time highs throughout 2022, even when Bitcoin was at all-time lows of that 4-year cycle. So things like that about the Bitcoin network make me extremely confident in it. And people will get worried about Bitcoin getting hacked. Well, because we have proof of work, we have the miners all around the world. So there isn't one server company that's managing most of the network. So you look at like Ethereum, right? Ethereum, 80% of the company called Infura is the server company that keeps Ethereum online. That means Jeff Bezos, Amazon, has enough power, if he wanted to pause the network. Ethereum, that's kind of scary. With Bitcoin, we don't have that risk. Like you can't, it's virtually unhackable nowadays. I couldn't say that about Bitcoin in its early stages, like 2010, 2011. The hash rate was a lot lower, so it could have been attacked easier. But now it's so robust, and the way the Bitcoin blocks work, and how we get block rewards or incentivized. That's how Satoshi wrote it in the white paper. we are incentivized to run miners to get rewards, and income, and profit. And the stronger your machine is, the more money you'll make, right? And then if you have more machines, you have a good electricity rate. It's just such a robust system because every 10 minutes, a block is mined every 10 minutes. And on average, every 10 minutes, the Bitcoin blockchain is being audited. That's how transparent the Bitcoin blockchain is, right? So that's why there's a lot of memes and a lot of pictures out there saying the Federal Reserve has never been audited or hasn't been audited in like 150 years or something crazy, right? But the Bitcoin blockchain is audited every 10 minutes, right? And it's so transparent. It's great. And with Lightning being off-chain, if you want it to be extra private, hold your Bitcoin in the Lightning network instead.
I love hearing all this stuff, and it makes me so proud, like, to be like a part of like the Bitcoin community. Like, that I just feel like we're all just like doing it together and like creating this new system, and I love that. But the main question that comes up often in relationship to what you're talking about, right? Especially now with the Bitcoin Spot ETF being approved, and an entity, let's talk about it, BlackRock coming in, and a lot of people are in fear. And Claire and I have had this conversation of, hold up, but BlackRock coming in, if they're continuing to buy up Bitcoin, and if they were to even get into mining, at what point could an entity like BlackRock or whoever it may be actually be able to take over the network of Bitcoin, whether it be from the proof of work, the miner's point of view, or can it even happen from an ownership point of view of Bitcoin?
Yeah,
This
I've
is
thought
the
about
genius
this
of
a bit.
Bitcoin.
I think once they start trying to acquire a lot of Bitcoin, they're going to find that the price is going to run away on them. And there's people that are, old school Bitcoiners like myself and a lot of other people I know that are just not in it to cash out. We're waiting for the point where Bitcoin takes over and becomes the money of the world, the reserve currency. And we're not looking to just get out of our investment once BlackRock comes in. We're holding for the long run, and we're anticipating that kind of a price rise. So we're not going to give up our coins too easily. And yeah, there's going to just be a point where there's just not enough supply of Bitcoin on the market for BlackRock to buy. The price will go to $1 million plus, and yeah, they're not going to be able to get all of it or that much of it. Even if they did, like in this scenario where BlackRock gets, say, a controlling stake of all the Bitcoin in circulation, and they have millions of Bitcoin, well, I don't really see how that's a negative thing either, because Bitcoin can be divided into such small fractions. Like on the base layer, you have 8 decimal places, so you can be dealing in Satoshis, right? Like fractions of a Bitcoin, 100 millionth of a Bitcoin. So if Bitcoin is worth, $1 million a coin or $10 million a coin, you can still have people doing commerce and using it for payments with fractional units of it. And with the Lightning Network, it goes down to millisatoshis, so you can have 1,000th of a Satoshi even and trade that around. And it's possible to go even lower with more decimals of precision if we really need to in the future. And with mining, I think if BlackRock tried to get into mining and be able to 51% attack, yeah.
Of course they are.
The Bitcoin always runs on consensus, right? So all the people using Bitcoin, running nodes, using it for payments, who want to use it as money, we always have this backup like plan B or contingency plan if a big actor comes in and starts wrecking it and trying to co-opt it or corrupt it. We can always fork Bitcoin to exclude them. So we can just write some code that says any blocks that are mined by BlackRock, we're just going to ignore them, and we're going to fork the network and have like a no BlackRock Bitcoin that we can just, use amongst ourselves. And if there's enough economic willpower to switch over to that network, it will be the one that has value to people. So the old BlackRock Bitcoin will slowly lose value and wither away, and the new no BlackRock Bitcoin will go up in value, and people will use that as their currency. So it's always up to the people, the plebs, the people running Bitcoin and using Bitcoin to decide how Bitcoin works, right? It is open source software that anyone can change and change the rules at will. But I don't anticipate we're going to have to do that. I don't think it's in anyone's interest to try to attack the Bitcoin network like that, because it's just not economically viable in the long run either. Like as soon as they start doing something like that and censoring transactions or doing something that we Bitcoiners don't like, then they're going to ruin it for themselves, right? They're going to poison the well, and everyone's going to see it because it's out there, like for everyone to see that they're doing something wrong. So the incentives just aren't there for anyone to do that. It's like the game theory behind it. That's part of why it's worked so well for as long as it has, and it's going to keep working that way.
Yeah, and it's really, that is also the kind of beauty and the genius of Bitcoin, is that, we already live in this proof of stake world, in my opinion. And so to be able, the way to sort of take over and dominate in our existing system, in our existing world, and then also a lot of different crypto projects that are sort of popping up now, is to have that dominant stake, the majority of the supply. Whereas with Bitcoin, even if you have the majority of supply, you then maybe have to have the majority of own the majority of the miners. And even then there's another layer of all of the nodes. And that's really what makes Bitcoin so strong and so powerful, is that to really change the core values, say the max supply or something like that, you really would have to have the consensus of all of the nodes to approve that update. And the likelihood of that happening is really so low, that's really what makes Bitcoin so powerful, so secure, is its decentralization. And I think that that's what's amazing about it. So why don't we move on to, you've already mentioned a little bit about layer 2. So why don't we dive into that for people that don't know the difference between what is like base layer Bitcoin and what are these level 2 applications that are being built on top of Bitcoin to improve efficiency and usability?
Yeah, so layer 2, or the Lightning Network for Bitcoin, it's a way of doing transactions faster and cheaper. So at a high level, that's its purpose, or what people are looking to it to give us, is that property of faster settlement, faster finality of your coins, and lower transaction fees. So with regular on-chain Bitcoin or classical Bitcoin, you get your address, and if someone wants to pay you, the sender has to decide what fee to put on the transaction. And that fee changes based on how busy the network is. So every Bitcoin block can hold about 1,000 to 3,000 transactions, or like, I guess it's 4 megabytes worth of data per block. And if there's more than that trying to compete to get processed, then the ones that pay the highest fee have to, or the ones that pay the highest fee get prioritized. And then so it becomes like a bidding war. Like if you want your transaction to get into the next block, you have to set a higher fee than the other thousands of people who are also trying to send a payment. Lightning Network alleviates that, where you can set up a payment channel with someone that you want to send a payment to, and you can do transactions with them where you're not broadcasting them and having them put into the blockchain. So it's kind of like running a tab at a bar where you kind of, have this credit system where you and the person you're paying can update the balance that you owe each other, kind of like giving IOUs back and forth. And only at the time where you want to close the tab in the Lightning Network, it's closing the channel. Then that's when you actually do an on-chain transaction that goes in the blockchain, and you have to pay the fee to do that. So I guess it's just a way of doing faster, cheaper transactions at its core.
And so how does that work? That then groups together, for example, so if the Lightning Network is being used for smaller transactions, like you're buying a cup of coffee at Starbucks or something like that, you don't really want to wait the 20 minutes, half an hour, or pay, I think it's $30-$40 transaction fee now on the Bitcoin network. So would, for example, an entity like Starbucks, I hate to use them as an example actually, but it's easy, everybody knows it. But would they then sort of collect those transactions? They'd use the Lightning Network. The Lightning Network would hold a group of those transactions and then put them together as one transaction. Is that how that works?
Yeah, exactly. It's a way of aggregating thousands of transactions or updates between the balance of those two people that are paying each other, in this case, Starbucks and their customer, and then settling it just when you want to close that channel. So if you never close the channel and you keep your money in the Lightning Network all the time, then you never have to pay that fee. So you can, have a transaction between you and Starbucks back and forth a million times, and neither one of you is paying a fee for that. Where it gets a little complicated, though, is if it's only one way, like if you're always paying Starbucks and they're never paying you, then you're going to get to a point where your credit in that channel or the liquidity in that channel is all on their side, right? Like you've paid them, let's say it's $10,000, you bought 10,000 coffees over the Lightning Network, and they're getting to the point where they're saying, okay, well, our channel is at its limits. Like that's the max that we want to transact with you without settling it out. So unless you're receiving a salary from them, like you're a Starbucks employee and they're paying you back over that channel, like to give you some money back, then it's going to get exhausted at some point. And that's where you have to either put up some new capital, like to open a new channel with them, or someone else that you're connected to has to have a channel to Starbucks, and then you can use their channel and they forward the payment for you and they charge you a fee to do that.
That's so Aquarian age. And that's what I love about cryptocurrency, because it's literally like it's incentivizing for people to do energy exchange constantly backwards and forwards between each other, rather than constantly just receiving or sending. I love that it's the backwards and forwards. And so with the saying that, though, I have so many questions, but I guess the simplest question is, then you want to be really selective with what wallets you are choosing to actually do transactions on. Like, as a person that wants to live in this world and transact with Bitcoin, I have to be really selective on which wallet I'm using.
Yeah, you have to be selective with who you open a channel with, because it's tying up your capital, right? So if I want to open a tab to pay Starbucks, I have to decide, well, do I put $1,000 into that so that I can buy up to $1,000 worth of coffees from them, or do I put $10,000 into it? Because meanwhile, that capital can't be used for other payments, right? So, you sort of have to decide who you're going to do commerce with. But the nice thing about the Lightning Network is, like I was saying, you can route payments through the network to people that you don't have a direct channel with. So if I have a channel to Starbucks and you have a channel to me, then you can pay me, but you can also pay Starbucks kind of indirectly. And the more people there are that connect together and have channels with each other, then the more places you can reach in the network and pay to without having to like directly channel with them. If that makes sense.
Well,
I kind of love that, actually. That's like sort of bringing, that is a very full circle sort of moment, because as we spoke about earlier, the whole basis of Bitcoin is really like removing trust from this system. And then the full circle moment is actually sort of incentivizing trust in who we do business with and building and strengthening those relationships, because you sort of need to have that that level of trust or that level of integrity with those people that you're going to do, you know, commerce with, basically. So that's a really beautiful kind of like full circle community example. I think that's so interesting. I'd never thought of it in those terms before.
Neither. It's so empowering. Like I love that. And also Starbucks, you're welcome for a free advertisement. We'll all drop our Bitcoin links below.
Starbucks are probably not someone I'll open a channel with.
Yeah, I know, right? Yeah. I know what you mean. It's I don't like, yeah, I mean, there's other coffee shops out there I prefer to support for sure. Regarding Starbucks, it's kind of like the CEO of Starbucks back in, I think, 2018, they did actually start accepting Bitcoin officially. I don't know if you're aware of this, Adam, but they were in some of their locations. And the CEO himself was like public about it, talking about it. And so to me, what I do is I take that information and I tell people that I'm trying to like orange pill, or I tell people that I'm trying to like get into Bitcoin, so I can like leverage that to help onboard newcomers and stuff like that. I heard that they are still accepting Bitcoin at a very small amount of the locations. So Silicon Valley area is where they would be most likely to still be accepting them. But yeah.
Wow. I mean, yeah, we all leverage these bigger names to be like, because it's that trust thing. We're so programmed to, okay, if Starbucks is doing it, if BlackRock is doing it, then we should too. Until then we get orange pilled.
Yeah, no, for sure. Yeah. And like Fidelity too, right? Fidelity is really big in Canada. Fidelity is way more popular in Canada than BlackRock is, as far as I know. So as soon as I've onboarded many baby boomers into Bitcoin in general, right? And when you tell them stuff like Fidelity's into it, and that you can literally go spend your Bitcoin at a store, they love that, because baby boomers are old school. They want to know that they can spend their Bitcoin, even though us four here, we understand that hodling is the right thing to do in most cases, but a baby boomer wants to hear that you can use like cash, right? So
yeah, absolutely. So why don't we why don't we dive into Koinos? Tell us about Koinos.
Yeah, Koinos is a wallet. So if you go to koinos.io, that's our website, and you can sign up right there. You don't have to download it from the App Store or the Play Store. You just go to our website, and there's a button to register a free account. It's just a username and password. So we don't KYC. You can just use a nickname. You don't have to use your real name or your email or anything. And once you log in there, you'll have a Bitcoin account, like a wallet account. It starts with a balance of 0, and it's denominated in Satoshis. So like we mentioned, there's 100 million Satoshis per Bitcoin. We use that as our default unit. So the idea is that Koinos is like a spending wallet, or if you want to think in terms of like checking account and savings account, it's the checking account that you're going to use to go out and have a little bit of money that you keep in there to go and spend at merchants. We don't have Starbucks on board, but we do have some cafes like that are owned by smaller companies, like mom and pop kind of stores. We've got a few restaurants, pizza parlors, barber shops, a bunch of local businesses in Vancouver that we've gone and convince them to accept Bitcoin payments directly. And so we're kind of tailoring the wallet to that sort of a use case for like merchant adoption. so that we can get people going out in the real world, and instead of tapping their credit card or paying in cash, you pull out your phone and you send a Bitcoin payment and you can buy things in real life. So yeah, that's the idea behind it. And then it also works just as a personal wallet or for individuals as well. So if you just want to use it to pay your friends back for a bill or send a payment to someone, it's just a really simple and easy wallet to get started with, where you don't have to learn about self-custody and how Bitcoin works and think about too many complicated things. It's just denominated in your local currency. You send someone like $5 worth of Bitcoin and they get it in their wallet really quickly, and uses the Lightning Network under the hood. So it's all free and instantaneous.
Fantastic.
And I say goodbye to 3% card fees,
Yeah.
which is very attractive to a lot of people, of course.
And then Adam, sorry, did you mention swooping?
I didn't mention that. Yeah. So yeah, on the topic of self-custody, Koinos is custodial. If you're using koinos.io, we manage that site and you're trusting us with whatever money you put in there. But we have an option, if you go into your settings for your wallet, to put in a withdrawal address and set a threshold on your balance. So when your balance reaches some number, it could be $100 or $1,000, whatever you're comfortable with, then once your balance reaches that level, then the money gets swept out to whatever address you've put in. And we allow you to put in either another Lightning address, so you could send to another Lightning wallet, or a regular Bitcoin address. So you could use your paper wallet or your hardware wallet address. Or we support the Liquid network as well, which is another layer 2 that we didn't really cover yet, but it's cheaper and faster than regular Bitcoin, but not as cheap and fast as Lightning, but it's less complicated than Lightning. So it's kind of like a middle ground between Lightning and Bitcoin.
Yeah. I think there's room for different options, because if we think about it, you know, it's very easy to say, okay, we want Bitcoin to be the money of the world, the reserve currency, but there's so many different layers and use cases under the banner of money. And so that's why we kind of like can break it up into these different use cases. Like, again, the example of Starbucks is very, very different from, you know, using your Bitcoin as a store of value, but yet it's the same Bitcoin, but we want to be able to use it in different ways. And I think that's why all of these different applications are coming up to enable us to use the same Bitcoin, but for different use cases.
Yeah. For both of you, if you were talking to somebody that is brand new in crypto, maybe this is one of the first podcasts that they listen to and getting close to starting in their crypto journey, what are just some tips of advice that you would give them when getting started?
I would say find out what their risk management strategy is, and get them to understand what their risk management is, what they're willing to risk. And that doesn't mean what they're willing to risk to lose. That's not what I mean. Just what are they willing to risk? How can they handle volatility? Find out how prepared they are for that, and then set them up with a suggestion and the DCA suggestion. Since I'm not a licensed financial advisor, it's all just suggestion, right? So DCA suggestion, and then get into a wallet that can be connected to your bank account with the lowest fees. So we have a few different options for that. I like to recommend Beaver Bitcoin, which is very friendly for Canadians to buy into Bitcoin from your bank account. Beaver Bitcoin's very easy. And then, of course, I'll recommend Koinos to them for Lightning and stuff. And then cold storage of any kind. So those three, I would say, are a must. If they have more than even $100, $200 in Bitcoin. Some people say, "Oh, it's okay. I only have $1,000." No, you're over $100. Like, I'm major on cold storage. A bunch of cold storage wallets, right? I tell people they have to get it. I don't say it's a good idea to. I said like, you must get cold storage. So those are some of my suggestions right off the bat. I do go a lot deeper because I do help manage stuff for people, but those are some of the first basics that I would say to start.
I love that. Yeah.
And
Really
then,
important keys.
yeah, and then Adam.
Yeah, with beginners, I'll usually start by setting them up a Coinos account and just sending them some money and showing them, here's $5 or something, and pointing out that the dollar value is going to go up and down, but the amount of Satoshis that you have is going to stay the same. And I'll get them to send me a little bit back so they get a feel for how to actually do a payment out. And they usually will ask about where can I buy more Bitcoins. So I'll talk about options for that and non-KYC versus KYC. And I like to recommend buying locally with cash in person if you have the option to do that. So I'll link them into our local meetup groups and Telegram groups where they can meet other, local Bitcoiners. And then we host regular weekly Bitcoin and coffee. So I'm always encouraging newcomers to come out and ask questions and help them go down the rabbit hole in person with a bit of hand holding. And there's usually other veteran Bitcoiners that attend as well. So it's not just me, they're getting different takes from different people. And we do a monthly Bit Devs, which is a bit more of a technical deep dive covering development updates and things and getting into the weeds. So yeah, we're just trying to foster an encouraging and enthusiastic community here where people can come out and learn about Bitcoin and practice using it. And and the merchant adoption side of it is a big thing too. We're also trying to drive sales and traffic to all the merchants that are taking Bitcoin so that we can support them and promote them and develop this kind of circular economy where everyone's using Bitcoin to pay for things, and the merchants are hopefully going to start using it to pay their suppliers and their staff and get the money circulating around that way.
And I just need to add, because I do have to go in a couple of minutes. So we do, like Adam was saying, we do have meetups. We have about 4 to 5 meetups per month. And at those places, like Adam said, we educate newcomers. We also talk about news regarding not just Coinos, but overall Bitcoin news, helping people stay up to date with that. And then we also set people up with their own Coinos wallet. Often we give them money too to spend at Coinos merchants around Vancouver. So a lot of people ask, are people really spending their Bitcoin in Vancouver? The answer is absolutely yes, they are, because they'd rather spend their Bitcoin than dirty fiat money, right? So, but even during 2022, we were onboarding businesses. In 2022, early 2022, we had 3 businesses using this. Now today we have over 450 worldwide, 36 in Vancouver. And even in 2022, we were having meetups with people spending their Bitcoin, right? So Bitcoiners want to spend their Bitcoin, whether it's low or high.
Ask you about merchants as well, because I do know a lot of people are sort of getting into that mindset of how can I sort of shift my business? Obviously, a lot of people they don't want to entirely shift their business into Bitcoin, but they want to have that option. They want to start opening up that option. So how would they go about doing that with Coinos? How would they become a merchant with Coinos?
Yeah, so it's free to register. You can go to our website and self-register yourself. You don't have to ask us to do anything. You can get yourself an account, and then every merchant gets a profile page based on your username. So if you go to coinos.io/4brothers, that's our pizza restaurant in town, and that's their URL, that's their page. And anyone who goes there can send them a payment. So you click on the pay button and you enter in the amount you want to send them in dollars, and it'll prompt if you want to add a tip. So you can do 10% or 15%. And if you were in the store, then yeah, you might, add your tip and pay them. And we've been providing the merchants with these printers. I got one here, it's plugged in. to my
Oh, wow.
so there's a little receipt printer, and as soon as a payment arrives in their Coinos account, it'll print out a little like paper receipt that tells them how much they received in dollars. So it's a really easy way for like staff who don't know anything about Bitcoin and don't know how to work a wallet and stuff. They don't have to deal with it at all. They just get a paper receipt come out and tells them what they got, and they put it in the till like cash. So the other thing we do with merchants is we put them on the map. There's a global map of all Bitcoin businesses at btcmap.org. And it's using OpenStreetMaps, which is kind of like Wikipedia for maps, where anybody can edit the map and add new locations and add tags and stuff. So a Bitcoin merchant can add themselves there. But if they're not like that tech savvy, then we'll offer to do it for them. They just need to let us know their physical address, and we'll list them there. And that's a big part of what we do is we promote the merchants. So if you're anywhere in the world and you're taking Bitcoin, if you're using Coinos, then we'll blast you out on all our social media. We'll announce it in our Telegram groups. We'll announce it in person when we have our meetups, and we'll try to send new customers your way. So that's one of our selling points when we're approaching new merchants who aren't taking Bitcoin is you have this big, strong community of Bitcoiners that want to go and spend their sats at new places, and we'll promote you for free. So it's one of the ways that we onboard new businesses.
Yeah, absolutely. The Bitcoin network is so powerful. The Bitcoin community is so powerful. It's one of the things I really love about Bitcoin actually is that if you are you're a business that you're wanting to use Bitcoin and you're wanting to support Bitcoin, you will have the power of the Bitcoin community behind you, supporting you. And I love that about the Bitcoin community.
I love it.
Yeah, me too. It's one of the issues though is we're trying to incentivize consumers to go and spend Bitcoin more, because a lot of Bitcoiners, they just want to hold it and watch the number go up. Getting people to go out and part ways with their Bitcoin is a challenge. So that's one of the things we're working on this year is coming up with creative ways to give people some kind of incentive or reward if they go out and support the merchants.
Yeah. Yeah, that is an interesting thing because I'm kind of like that. I'd rather spend my dirty fiat and hold on to my Bitcoin. It's actually sort of my mentality. But I was speaking about to someone the other day about they were talking about communities actually in Australia that are sort of very much like government subsidized communities. And I sort of said that like my vision for that to sort of like empower and uplift these communities would be so great to see them starting to take that government money that's been given to them every 2 weeks or whenever and start to put that into Bitcoin and then start to trade amongst themselves in Bitcoin and sort of taking that power back and releasing that dependency on the government. So I think we're going to see a lot of these sort of small pockets within of use cases for Bitcoin and for Bitcoin transactions. And I love that you guys have created a technology that's making that so easy and user-friendly for people to do that. So hats off to you and your contribution to the Bitcoin community. It's awesome. And moving that forward into that, through that evolution from the store of value, which we're very much in right now, and more into that use case of using Bitcoin as money, using Bitcoin for payments and transactions. It's awesome.
It is.
Thanks.
It is. It's so exciting. Really, thank you guys for, of course, all the work that you're doing and also coming on and sharing all of this information. So the best place to find you guys, to connect with you guys is coinos.io, or is there any other way that you would prefer?
No, yeah, that's the best way. If you go down to the bottom of our homepage there, you'll find a link tree page where we have all our socials and other contacts there. But yeah, coinos.io, that's the main way to find us and get started.
Yeah. Well, thank you so much for your time. Thank you for your information. I I know I learned some things, and if anything, I'm like even more, it's just like added another brick to like my, yes, like we're in the right place at the right time, but we're also just beginning. Like there is still so much more expansion, and that we all get to be a part of it, and that we're all helping in this creation of a new world, a new space.
Totally. Yeah. Thanks for having me. It was a pleasure. And I'm looking forward to checking out this episode, but I'm going to go and watch a bunch of your other podcasts and stuff too. So
yeah,
Awesome.
enjoy learning some astrology along the way.
That's part of your thing is Bitcoin astrology. We actually had another astrologer attending one of our meetups for a while. So
awesome. Yeah. We really feel like we're almost sort of documenting. We release a podcast episode every 2 weeks, like every full moon and new moon. But we sort of feel like we're documenting the evolution of Bitcoin through these cycles. And we sort of feel like when we look back on these episodes in 10 years, it's going to be really interesting to sort of see how Bitcoin has evolved through these big shifts of energy, on the planet. So it's really interesting to observe that and be part of that.
yeah, we'll have the records so can see what was happening in the past. Yeah, it's exciting.
Timestamp.
Yeah, exactly. Well, thank you so much for joining us. We really, really appreciate it. And we look forward to connecting with you further, maybe in person at some point, and catching up with you. Thanks for all of the amazing work that you're doing. And peace, love, and Bitcoin.
Yeah, thanks, guys. Peace.
Thank you for joining us for another episode of the Bitcoin Zodiac podcast. We hope you enjoyed our discussions about the evolution of Bitcoin viewed through the lens of financial astrology. This podcast does not offer financial advice, so please make sure you do your own research. And stay tuned for our next episode, where we will continue to dive deeper and build off these perception-expanding topics. Remember, whatever your beliefs may be, we all have something to learn from each other. So stay curious, stay open-minded, and keep exploring the world of Bitcoin and astrology. As always, may the stars align in your favor and your crypto investments prosper. Until next time, peace, love, and Bitcoin.